بسم الله الرحمن الرحيم. السلام عليكم ورحمة الله وبركاته. Dear students of third year Modern Academy, with you Dr. Adel Hussein. We will complete our course Social Accounting. In the last time we explained chapter 3, Accounting for Human Assets. Another example for more understanding. On 1/1/2020, Al Ahly club contracted with one of the players to play for 5 years against two amount of £6 million received by the player at the time of the contract. At the end of 2022, the player moved to the Malik club against the £2 million. Required prove the above transactions. The first, the cost of obtaining human assets. Human assets is an asset, so if we obtain human asset, it means asset is increased, so it will be in the debit side. Credit side will be cash, because cash is an asset and decreases, so it will be in the credit side. So the entry will be human assets in the debit side 6 million, cash in the credit side 6 million. So at the end of the year we should calculate depreciation. So depreciation premium shall be made in one of the known or fixed consumption methods. As we said in the last time, there are many methods for calculating depreciation, as straight line method, declining method, double declining method. The entry in this case will be depreciation premium is an expense, so it will be in the debit side. Credit side will be human assets, because depreciation decreases asset. So firstly, depreciation equal cost of asset divided life. Cost of asset 6 million, life 5 years, so depreciation premium will be 1,200,000. The entry will be in the debit side, depreciation of human asset, because depreciation is an expense. Human asset in the credit side, because an asset decreases, so it will be in the credit side. At the end of the year, any expenses or revenue should be closed in the statement of social costs and benefits. In the first stage, expense will be in the debit side. When we close this expense, it will be in the credit side. So statement of social costs and benefits in the debit side, depreciation of human asset in the credit side. Depreciation of human asset is an expense. In the first stage, it will be in the debit side. When we want to close this expense, it will be in the credit side. In the debit side, we will put statement of social costs and benefits, because the expense of depreciation will lead to decrease in our profit. So statement of social costs and benefits will be in the debit side. Disclosure in the financial statements shows the depreciation of social assets in the statement of social costs and benefits as follows. At the end of the first year, statement of social costs and benefits consists from expenses and revenue. Expenses, we will put depreciation of human assets 1,200,000 in the expenses. Another statement, budget or balance sheet, economic and social assets and accumulated depreciation as well as human assets are shown as follow. In the left side, assets, on the right side, liabilities and owner's equity. Assets consists economic assets, social assets, human assets. Human assets, the value of human assets 6 million minus depreciation 1,200,000, so the amount of human assets will be 4,800,000 in the first year. Dispensing with human assets at the end of 2022. Human assets may be dispensed with amount of money. First, book value of human assets equal cost of acquisition 6 million minus total depreciation premium. Depreciation premium for the year 1,200,000. Multiply 3 years because we maintain the human assets for 3 years. So the total depreciation premium will be 1,200,000 multiply 3 years equal 3,600,000. So the book value of human assets equal 6 million minus 3,600,000 equal 2,400,000. Gain or loss of dispensing. Gain or loss of dispensing equal amount of transfer or sale 2 million minus book value 2,400,000. So amount of sale is smaller than book value of human assets, so the result will be losses of dispensing equal 400,000. The entry in this case will be cash amount of sale will be in the debit side because cash is an asset and increases 2 million. Losses will be in the debit side 400. Human assets it will be 2,400,000. Our entry again, cash will be in the debit side because the asset increases. Human asset will be in the credit side because asset decreases. Clothing the loss of dispensing human assets. The first stage loss will be in the debit side. When we close the losses of dispensing human assets, it will be in the credit side, and the statement of social costs and benefits will be in the debit side. Disclosure in the financial statements shows the depreciation of social assets in the statement of social costs and benefits as follow at 31 December 2022. Statement of social costs and benefits. In the expenses, it will appear depreciation of human assets 1,200,000, losses of dispensing human assets 400,000. Economic and social assets and their accumulated depreciation as well as human assets are shown as follow in the budget on 31 December 2022. Assets in the left side liabilities and owner's equity in the right side. Human assets are dispensing, so there isn't any amounts for human assets on 31 December 2022. Another example, on 1/1/2020, the National Bank contracted with an English banking expert to restructure the bank within a period of 5 years against the amount of £4 million received by the expert at the time of the contract. At the end of 2022, the banking expert died. Required proof the above transactions. In this example, there isn't any transformation from one entity to another. The human asset is died. So we will solve this example as follows. First, cost of obtaining human asset. Human asset will be in the debit side because asset increases. Cash will be in the credit side because asset decreases. 4 million in the debit side, 4 million in the credit side. A depreciation premium shall be made in one of the known or fixed consumption method. The entry in this case will be depreciation premium in the debit side, human asset in the credit side. Firstly, depreciation equal cost of assets divided useful life. Cost of assets 4 million divided 5 years. So the depreciation premium will be 800,000. The entry will be depreciation of human assets in the debit side because it is an expense. Human assets in the credit side because asset decreases. At the end of the first year, premium depreciation closed in the statement of social costs and benefits. Premium depreciation in the first stage, it will be in the debit side. When we close premium depreciation, it will be in the credit side. So, in the credit side, depreciation of human assets, because we close the depreciation. We close the depreciation in the statement of social costs and benefits. So, social costs and benefits will be in the debit side. 800,000 in the debit, 800,000 in the credit. Disclosure in the financial statements shows as follow in the first year. Statement of social costs and benefits, expenses, depreciation of human assets. Economic and social assets and accumulated depreciation as well as human assets are shown as follow in the budget or in the balance sheet at the first year. First year, human assets will appear 3,200,000 because the cost of acquisition 4 million minus depreciation for the first year only 800,000. So human assets 3,200,000. Now, human asset isn't dispensing. Human asset is died. Human assets may be died where the loss of death is determined by carrying amount of human assets. Losses equal cost of acquisition of human asset minus total depreciation premium. This asset, firstly, the amount of human asset equal 4 million. He stays in our company for 3 years. Depreciation premium for the year 800,000. So the total depreciation premium 800,000 multiplied 3 years equal 2,400,000. So the losses 1,600,000. These losses equal the remaining amount of contract with this expert. Loss of human asset in the debit side, human asset in the credit side. Human asset in the credit side because this asset decreases, so it will be in the debit side. Clothing the loss of human assets. In the first stage, these losses in the debit side. When we close these losses, it will be in the credit side, and debit side will be statement of social costs and benefits. Disclosure in the financial statements shows the depreciation of social assets in the statement of social costs and benefits as follow at 31 December 2022. Expenses depreciation for the year 800,000. Beside losses of human asset 1,600,000. According to the budget or balance sheet, in the date of 31 December 2022, human asset is died, so there isn't any amount for human asset. Chapter 5, Accounting for Intangible Assets. According to International Accounting Standard 38, IAS 38 sets out the criteria for 1. Recognizing, 2. Measuring intangible assets, 3. Required disclosures about them. An intangible asset is an identifiable non-monetary asset without physical substance, such as computer software, trademarks, copyrights, goodwill acquired in a business combination is accounted for in accordance with International Financial Reporting Standard 3 IFRS 3 and is outside the scope of IAS 38. Internally generated goodwill is within the scope of IAS 38 but isn't recognized as an asset. Internally generated goodwill isn't recognized as an asset because it isn't an identifiable resources. Intangible assets with identifiable useful lives, limited life, include copyrights and patents. These items are amortized on a straight line basis over their useful life. Some examples of indefinite life intangibles are goodwill and perpetual franchises. These items aren't amortized but are assessed yearly for impairment. So intangible assets may be definite, so it has useful life, limited life. So we should every year calculate amortization cost based on straight line method. According to other type of intangibles, indefinite life, such as goodwill and perpetual franchises. These items aren't amortized but are assessed yearly for impairment tests. If a company acquired a copyright on new graphic novel for £10,000 and estimated it would be able to sell that graphic novel for the next 10 years, so the cost of intangible equal 10,000, useful life 10 years, so amortization cost it will be 1,000, because we divided 10,000 the cost of copyright divided 10 years useful life. So what is the entry in this case? The entry in this case will be amortization expense 1,000 in the debit side, copyright in the credit side, because copyright is an intangible asset and decreases, so it will be in the credit side. Every year we will make the same entry for useful life of an asset. Goodwill. Goodwill is internally generated and isn't recorded as an asset unless it is purchased during the acquisition of another company. The purchase of goodwill occurs when one company buys another company for an amount greater than the total value of the company's net asset. The value difference between net asset and the purchase price is then recorded as goodwill on the purchase's financial statements. So goodwill equal purchase price minus total net asset for the company. For example, say corporation was sold for 10 million. The new owner received net assets of 7 million. So purchase price equal 10 million. Fair value of net asset equals 7 million. So the goodwill difference between purchase price and total value of net asset 7 million. So the goodwill it will be 3 million. The following journal entry show how the new owner would record this purchase. Again, company A purchased company B, total purchase price equal 10 million. Net assets for company B 7 million. So the seller company paid 10 million and received 7 million. So the difference between purchase price and net assets equal 3 million. These 3 millions are goodwill. The entry will be net assets in the debit side because asset increases for company A. Goodwill will be in the debit side because it is an intangible asset. We paid 10 million, so cash decreases, so it will be in the credit side. Goodwill doesn't have an expected life and therefore isn't amortized. A company is required to compare the book value of goodwill to its market value at least annually to determine if it needs to be adjusted. This comparison process is called testing for impairment. Goodwill doesn't have an expected life, as we said in the last slide, therefore isn't amortized. A company is required to compare book value of goodwill to its market value at least annually to determine if it needs to be adjusted. This comparison process is called testing for impairment. If the market value of goodwill is found to be lower than the book value, then goodwill needs to be reduced to its market value. If goodwill is impaired, it is reduced with a credit and an impairment loss is debited. The entry will be impairment loss in the debit side, goodwill in the credit side. Goodwill is never increased its original cost. Goodwill is never increased in any cases to its original cost. The entry for impairment loss, it will be in the debit side, goodwill in the credit side because it is an asset and decreases. So the entry to record goodwill impairment loss in the debit side, goodwill in the credit side.